Oh well, oh well, oh well. We finally have the congressional review of the whole meme stock trading frenzy that happened, almost 18 months now with AMC and GameStop. And in the midst of it, we have some very interesting outcomings, out of this whole report, precisely when it comes to Robinhood. And this shows me, and it kind of confirms a little bit what I've been stressing out since a couple of months now around what we should be prepared for when it comes to making sure we maximize our gains in the midst of the coming short squeeze, because you will see by yourself when we get to some of the elements that this report coming from Congress review, it's showing based on what exactly originated companies such as Robinhood to suppress the buy button back in January 2020. So let's look exactly at what happened. I'm going to share this article and I'm going to go through it, and then the main highlights. So the House panel's findings suggest Robinhood's decisions during market shakeup matched the broader industry moves, company statement argues. Well, let's see exactly what they're talking about. So the House Financial Service Committee on Friday issued a awaited report on the meme stock phenomena, shining a new light on pressures faced by retail brokerages, including Robinhood Markets Inc., during the height of the trading frenzy around companies, stocks such as GameStop and AMC. So before the end of January 2021, GameStop shares had surged from roughly $20 to almost 400 intraday, all right, prompting retail brokerages like Robinhood Markets and others to briefly halt buying in the stocks, which was never ever seen before ever, in a move that provoked widespread public outrage. I mean, are you kidding me? Of course. How can you prevent people from actually buying a stock? Well, it gets even more juicy because we will know exactly, in the midst of this, in the next lines, why they did this, all right? Now, investors have another chapter in the saga to read, courtesy of the congressional hearing on an 18-month long investigation that culminated on Friday. That was, 2 days ago, with the release of the House Financial Service Committee report on the episode. So I'm going to, just stick to the juicy part. Specifically, this whole thing, first of all, provides new details about what happened behind the scenes, as Robinhood executives, including the CEO Vlad Tenev, were asserting that the brokerage always was comfortable with its liquidity. We will see down below that this is actually not very true, not that much accurate. Internal communication with Robinhood cited in the report paint a different picture. Well, they're saying, just to kind of see where we're going. Robinhood is saying we were all comfortable in terms of liquidity, but the report, based on what the Congress House of Financial, Committee review and investigation show, is totally different. They show initial concerns about liquidity by CEO Tenev, Chief Financial Officer Jason Warnick, and the Chief Operating Officer Gretchen Howard, and Robinhood Securities President Jim Swartzwelt. I'm not sure if I'm pronouncing the names properly, turning into extreme alarm by the morning of January 28th, when it became clear to the firm that they were in danger of being cut off by its clearinghouse for falling short of its collateral requirements. I thought you guys said you were good in terms of liquidity, right? Now the communications between the CEO, the COO, the president, and the CFO are actually saying totally different things. Early in the morning of January 28th, the president texted the COO, Howard, that the firm was experiencing a huge liquidity issue. The problem was that the firm had failed to anticipate an excess capital premium in charge based on the prices of AMC GameStop surging. And this left the firm roughly with a $3 billion short of its collateral obligations. Anxieties among the senior Robinhood leadership continued to escalate. The report shows that until the company later in the day received a $9.7 billion waiver of its obligations from the DTCC, only then did the company's leadership receive the breathing room it needed to focus on other operational issues facing the company, according to the report. Prior to the waiver, some fears were raised about the possibility of Robinhood being subject to a forced sale into or into bankruptcy in a similar fashion to Lehman Brothers in 2008 and MF Global in 2011. Gets very interesting, right? Let's continue. The company was only saved from defaulting on its daily collateral deposit requirement by a discretionary and unexplained waiver issued by the NSCC, over which Robinhood had no control. The NSCC is a subsidiary of DCCC, if you already know. Now, a representative of Robinhood's Deputy General Counsel or head of government affairs said the report that this was nothing new in an email he sent to Marketwatch, the media outlet we are actually reading the article from, while calling these circumstances of January 2021 detailed in a report once in a generation event that stressed every stakeholder in the market. The report corroborates that the decisions and requests Robinhood made and waivers granted were generally the same decisions, requests and waivers made and granted by others in the industry. So if this is the case, and if this is a kind of a generic procedure across the industry to actually have a discretionary, meaning it comes out of the blue. It is not something that is being prescribed or authorized or have a framework or guidelines based on something already written down. No, it means all of a sudden something just decided that, hey, let's just give these guys a waiver. Let's just give these guys a pass because they are facing bankruptcy. Now, if this is the kind of the norm across the industry, why is this discretionary? Why is this not explained? Why all of a sudden this is coming from thin air, out of the blue, suddenly? Is that a coincidence? No, I don't think so. And this is where, folks, we need to be really, 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 really careful with what is coming our way next. Why? Because in simple language, right, in simple plain English, this simply means that when AMC and GameStop started squeezing, they squeezed the shorts based on payment for order flow and the relationship between Citadel, Virtue, all of the other market makers. But specifically with Robinhood was facing either being cut off by the DCCC, meaning you don't have any margin per se, and without margin you can operate as a broker. Second, it was either that or they are pushed into bankruptcy. But remember, back then, Robinhood was seen as the savior of retail investors and retail traders. Like they were supposed to simplify and be on the side of the average Joe on the street when it comes to making investing and trading in the stock market as easy and user friendly as possible. So they had a lot of people that invested a lot of money into that company. Billionaires that are behind the scenes that you won't even hear the name ever because maybe they're silent or not. Bottom line is those people with big money and big pockets couldn't face the reality of being squeezed by retail investors, by the average Joe on the street. Why? Because it was either you pay us or you did what you guys did, which was pretty much suppressing the buy button, because by suppressing the buy button, you're pretty much making sure that we can't, continue to send prices higher. So that to me simply means if they did this, all right, and they're not even transparent or intellectually, what did the word they call? Is it fair? Anyway, they don't have the balls to come and say, okay, it's been 2 years, we were wrong because we didn't anticipate this, and because of that we had to do something, because it was either they die or we die. And because they had people with big money behind them, they chose obviously Robinhood, and we're left hanging there in our blood. Now, do you think they cannot try to repeat the same scenario by suppressing the sell button? Because we all know they cannot prevent what is coming from happening. So in some way, some form or shape, they will try to do something to minimize the losses. And that's why I've been saying for months now, we need to be prepared for the worst, because even if AMC reaches your highest target you could ever imagine, they can still pull something. They can either, prevent you from withdrawing the money out of your bank account once you sold. They can either prevent you from selling at the high, because there is no possibility the sell button is gone. Like the buy button was gone. So just to be aware of the shenanigans that can still happen, because if you think you've seen it all, like you've seen everything in this current stock market, nope. They will always, pull something. Always pull something. And I don't want us to come this far and just, not be smart about our next move, especially when it's time to cash out. So something to consider.